If you want to know what's actually going on with blockchain, digital assets, and why the tokenization of real world assets actually matters, this is the video you want to watch. We're going to break down what the numbers actually look like, which networks are going to be used, and what the value of these tokens is going to be in the future, predicated on real numbers. No BS. If you're interested in that, stick around and watch all the way to the end. This is going to be a full comprehensive video of all the different asset classes that I think are going to become tokenized in the next 10 years. And there's many others. There's going to be things that don't have a quantifiable value, like medical records, and other things that don't have a tangible data even value that can be moved on chain. And that's just, it's going to be difficult to have real conversation about the numbers and what the value of the tokens that are moving that data is going to look like. We're going to focus on financial products. Okay, these are things that are traded today. They have actual values that you can quantify and go find today if you want to go look them up, which we're going to share with you on this video. If you want the spreadsheet that all of this is on, you can join the mastermind, Beyond Broke Mastermind, for a free month there. You just go put in the code Beyond Broke, all capitalized, the number 1, and then MO, like Mary Oscar, get you a free month in Carbon 1 or Social. Carbon 1 is where this resource is going to be for people if you want the full breakdown spreadsheet. So anyway, let's go ahead and get into it. So first up, we're going to talk about private credit. This is where most of the adoption has been to date for the tokenization. You got Maple Finance, you got Arch Lending, you got Centrifuge, you got Goldfinch. There's lots of people that have already been doing private credit on chain. So these are hard lending, people that are taking collateral in digital assets, sometimes Bitcoin, sometimes Ethereum, XRP, Solana, other digital assets, and they will lend with an LTV or loan to value ratio against that hard collateral on chain. And they will give you USDC or Tether or another stable coin as a representation of value, as a line of credit or a loan against that asset. And you've seen this done with Aave and Compound. There's many other DeFi protocols, but there are some actual companies that are doing this. And that's where the main adoption to date has really taken place. There's a lot of other things we're going to discuss here. And we do this now at Digital Wealth Partners. We partner with many of these people and provide lines of credit and loans against XRP for people, along with Bitcoin and Ethereum if they have them. If that's something you're interested in, go check out digitalwealthpartners.net. So right now, the total addressable market for private credit globally is $1.5 trillion. So how much of that has actually been tokenized? Up to date, it's just 12 billion. That's it. Across all of these providers that are currently providing this on mostly EVM-based networks, there's a little bit on Solana. It's a small percentage. It's like 0.8% of all of the hard money lending and private credit that's been tokenized. So very, very little. And it's only in this application, right? Hard money lending against real estate or private equity or stocks or any of the other collateral that you could be putting up as collateral for this type of loan or line of credit. The total global trading volume for private credit is $1 to $2 billion. So if that were to move on chain, this is what actually is going to move the price of tokens. Okay. The trading of these debt obligations or the repayment of these loans, when value is moving over the networks, there's volume, and the volume is what's going to cause the need or demand for a token to be able to settle that, right? And you may have to lock this up in certain protocols. So the supply of these tokens might also be affected and therefore drive price appreciation, right? So, and again, we'll talk about what that's going to look like for some of these networks at the end of this video. So based on what I've seen to date and where the adoption is for private credit, it's going to be EVM-based networks that end up winning out on this. So that could be Ethereum, it could be Polygon or MATIC, it could be maybe Solana, right? I mentioned there's a small piece for that as well. It could be the XRPL EVM sidechain, anything that is EVM compatible. So what is EVM? EVM is the Ethereum virtual machine. It's the component of the Ethereum network that allows for the smart contract capability for the tokenization of things. The Ethereum network itself is slow and costly, and that's why there's a lot of layer 2s that have been built on top of that try to solve those problems. But being coded in Python and Solidity, there's the majority of developers at this point that work in smart contracts know those languages, and therefore that's where most of the adoption has been. So you're going to see that can proliferate, in my opinion, for private credit. Most of this is going to end up on EVM-based networks in the future, and this could be layer 2s on top of Ethereum, or it could be XLR that allows for interoperability between EVM-based networks and other protocols. It could be on the side chain for the XRPL. There's a lot of where it might end up, kind of up in the air, but it's going to be EVM-based. So that's private credit. Next, we have the most prevalently thing tokenized besides private credit, and that's going to be U.S. Treasuries. You have a huge mover here, which is Ondo. Securitize and BlackRock and a lot of other parties are looking at this. You got Franklin Templeton, which is also somebody that's tokenized treasuries, but they've done it on a Hyperledger instead of the EVM or Ethereum-based networks. So currently, total market cap for U.S. treasuries, it's going to be $25 trillion. It's a lot of debt that we have issued. Total trading volume per day on that tier one asset is $600 billion. That's a lot. Right? So you can imagine whichever network garners the majority of that trading volume is going to have pretty significant price appreciation. We've got Ondo and then EVM-based networks, and you also have Hyperledger, which is XLM. So those are kind of the leaders right now. Ondo is EVM-based, right? But it does have a token associated with it, and it does lock up, and it does move that value. So that's the current leader. Where does that end up going for the price of that token? Probably pretty significant. So the total current tokenized value for treasuries, you guessed it, is tiny in comparison to the 600 billion that exists. It's 0.016%. Only 4.05 billion U.S. treasuries, or the value of U.S. treasuries, have been tokenized up to this point. Very, very small amount, but it is liquid, right? And so this, and you would say, well, treasuries are already super liquid. Why would you start tokenizing that asset? Because it's a tier one asset. It's no risk, and it allows for a safe haven and a way to earn yield or return on the money that you have in digital assets. So let's say you wanted to swap out of your Bitcoin because there's volatility in the market. You see it moving further to the downside. You want to put your money somewhere instead of just parking it in a stable coin, and some of which, do pay yield right now. The stablecoin bill that currently sits in legislation that's on the docket to be passed isn't going to allow stablecoins to pay yield. We'll see if that changes or not, but for sure, treasuries are going to pay yield. So if those have been tokenized, it's an easy swap from one tokenized asset into treasuries. You could trade real time, 24/7, 365, and de-risk into something that's going to pay you some type of return for sitting your money there. Money markets, and we'll talk about those later, are another option. But this is the safest option currently that exists on chain for you to be able to trade into to mitigate risk and generate a yield. So it's what's seeing the most adoption and the fastest pace adoption aside from the private credit market. And that's why we're kind of talking about these in order here. So the winners, I think, over the long term for this are going to be any EVM-based network, Hyperledger. I think that's going to be it. So that could be, again, the side chain on the XRPL that's EVM-based. It could be layer twos on top of Ethereum. I don't think it's going to be Ethereum itself. Ondo already has a huge head start here. And then, again, with Franklin Templeton tokenizing some of that on Hyperledger, XLM could benefit as well. Next up, we have commodities. Okay, so this is gold, silver, oil, corn. So with commodities, there's a lot of futures and derivatives. And so I think that that'll probably end up on some other chains. And we'll talk about the derivatives later in this video and what those prices might be. Right now, we have PAX-G, which is an EVM-based network. We have MeldGold, which is Algorand. And then we have XDC, which has Comtech, which has tokenized warrants for gold, which is based in Dubai, which is pretty cool. And then we have other people looking to tokenize oil contracts and many other things. But the winner who aggregates the majority of the commodities is going to be wildly successful. There's a ton of value there. There again, $37 trillion. The total daily trading volume for commodities is $300 to $500 billion daily. So what's been tokenized up to this point? Well, you guessed it, just a tiny little fraction again. It's around 0.03%, around $1 billion is all that's been tokenized. So, and the majority of that is gold. You have a few other people that are looking to get into this space like Glint, where they allow you to pay with the gold. But as far as actual trading of the commodities, I think the winner here long-term is, again, kind of who already has traction. We got EVM-based networks, and we have XDC. I think those are going to be the three main competitors in this space, and likely who is going to aggregate the majority of that market share. XDC does warrants and debt notes and things that are contracts that have value. So a warrant that represents gold in a vault somewhere makes a lot of sense. It could be bonds that represent gold in a vault somewhere. Also, we'll talk about bonds later, and XDC might play a role there. So this space is projected to grow pretty significantly in the coming years. But again, the majority of what's been tokenized up at this point for commodities has just been metals, gold in particular. So next up, we have institutional funds. So these are hedge funds, which we've seen securitized really kind of move in here pretty strongly. And they built their stuff on EVM-based network on a layer 2 that is Ethereum-based. They really don't have a whole lot of liquidity for these funds that they've tokenized. That's a lot of headlines. Carlos, is pretty conservative with his predictions for what's going to be tokenized in the coming years. You've also got Franklin Templeton, which is tokenizing some of their funds on Hyperledger again. And then you've got Arca, which has tokenized some of their funds on chain as well. And I think this is going to become much more prevalent as things move forward and progress here. Hedge funds, again, don't see the benefit of it right now just because there's not a whole lot of liquidity. Who's going to buy it? Who needs a tokenized fund? Once we get stablecoin regulation in the US and we have the adoption of some of these networks at scale, and you need interoperability between the hedge funds so that they can trade in and out of these with other products, I think that's when you're going to see the explosion of this. It's projected to go to $317 billion that have been tokenized for institutional funds by 2028. So what does it look like today, though? We have about 0.03% of the total value if it gets to just that amount. There's only a couple billion that have been tokenized again by the people today, but the total space has $100 trillion that could be tokenized and moved on chain. Just ridiculous amounts of value will move on to these networks over the next 10 years. And currently, the total trading volume for these institutional funds on a daily basis is somewhere between $100 and $150 billion. Again, these are large amounts of value that are being moved and exchanged and traded between different institutional partners. And if this were to move on chain, again, whichever network were to get the adoption there would likely see some pretty significant price appreciation. So which ones of those is it going to be? Well, again, up to this point, what we've seen for adoption, and that's what I'm going to go with because I don't want to say we're late in the game at this point, but if you don't already have traction in one of these areas or the right partnerships, I mean, we're 15 years in reality with blockchain and this technology. Similar to the internet, I think we're still in the second or third inning, but the early movers have an advantage at this point. And so a lot of the base layers and base networks and protocols that are going to be adopted for these applications have really kind of moved into place and are the main players at this point. And not to say there won't be layer 2s or other people that come in, but like the Google that owns the 80% of the market share, and there's like DuckDuckGo and Ask Jeeves and a few other search engines that fight over the other 20%. I think that's how this is going to work for the majority of these markets as well, or these protocols that move this value. So there's going to be winners that take large pieces of market share, and the people that are first to market and have the adoption are likely going to be the ones that do that. So again, just back to the institutional funds, EVM-based networks. Again, we can go back to the side chain for the XRPL that's going to be launching at the end of April here, along with Hyperledger. And then it could be other layer 2s on Ethereum that would gain market traction. So there you have it. And we'll, again, talk about the price appreciation or the potential price predictions here at the end of the video. Next up is a lot of people anticipate that this is going to happen a lot sooner than I think it's going to. And that's because I'm dealing with it. Tokenization of real estate, the titles and the deeds and all the contracts and the escrow and the title agent. There's just so many people in the middle that make a piece off of transactions for real estate. That's why they happen so slowly today. Once those move on chain with smart contracts, you'll probably be able to buy a piece of property in 1 to 3 days instead of 30 to 90 days like it takes to now, right? Because of all the intermediaries and pieces that have to move in the courthouse. And anyway, so let's get down to it. The tokenization of real estate, again, I think is going to move slow. And the prediction is that only $1.5 trillion worth of real estate will be tokenized by 2030. Could it happen faster than that? Absolutely. If somebody comes along with a way to streamline this process for all the counties in the US and globally to be able to move all that paperwork on chain with some type of oracle and systemized or systematic way to do it, or they provide them grants to incentivize them to do it, sure, could happen a lot faster. I think derivatives of real estate will see a lot more adoption sooner than the actual tokenization or NFTs being issued against the actual titles of real estate. But let's talk about the actual amount that will be moving on chain at some point in the future. And that is $326 trillion is the total market cap globally for real estate. Here in the US, that's around $50 trillion. And there's one team in particular that I want to touch on for this application that has got a lot of traction there. I say a lot, some traction there. So the main players in this space that have already got to market and are tokenizing real estate are Red Swan. They're doing that on Hedera Hashgraph. We got Propy, which is on a derivative of the EVM. You've got Real T, like REAL capital T. You got Honeybricks. These are all people that have applications where they've tokenized some real estate. You've also got some other players like DigiShares that have done that through SPVs, and we'll talk about that a little bit later in the video and why I think that'll happen a little bit faster than the actual tokenization of real estate, like I mentioned before. So what's been tokenized up to this point? Almost nothing, again, in comparison to the total value, at about $3 billion. Up to this point today, about $3 billion has been tokenized on chain of the actual real estate that exists globally. A very small amount. The total transactions for real estate that happens daily, the 10 and $15 billion that is transacted daily for real estate. I think that's because of the frictions in the market. I think that could be much higher if you didn't have all these intermediaries and friction and time that takes for an actual transaction to take place. So once it moves on smart contracts, I think that'll move up pretty significantly. And again, that will exacerbate the valuation of whatever networks or tokens aggregate the lion's share of those transactions. So we mentioned, again, we got EVM networks, we have Hedera Hashgraph. And those are really kind of the only two players in the space that have started to do this or have the capability with the smart contracts and the way that things are laid out. Red Swan's pretty interesting for Hedera. That's, kind of the only thing outside of any EVM-based networks that has gained any market share or traction. And again, this is just a burgeoning space that I think it's going to take a little bit longer for real estate to move on chain, but it's a big opportunity for anyone that can figure it out in whichever network it ends up on. So now we get to the behemoth in the room, the largest asset class. And I think there's just going to be maybe one winner for this one, which is wild. And that is public equities. So currently the notional value for public equities is somewhere between 115, 125 trillion dollars. There's derivatives that go all the way up to 600 trillion, but the actual notional value of the stocks themselves is going to be around $120 trillion today in 2025. And I think it's really just going to be one blockchain or really a private chain that's going to garner the majority of this, or maybe even the whole thing. And that is Corda. I think that they're going to get the majority of this. You could have Polymesh, they have public and private networks, but I think we'll talk about them later for private equity transactions. I think almost all of the public equities are going to end up on Corda, and they're going to settle back in through XRP or XDC, most likely XRP. So let's talk about the numbers. What does this actually look like? Today, there's about $115 trillion in stocks globally across London Stock Exchange, New York Stock Exchange. We got the Texas Stock Exchange coming here in 2025 or 2026. Australia, Singapore, there's a lot of stock exchanges. The most liquid one and the highest value is currently here in the US, the New York Stock Exchange. And the total daily volume across all of those is around $500 billion worth of trading on the back end between the clearinghouses and the brokers. And they don't settle real time. They settle T+1. And that's why you need Project Ion and Corda to be able to settle these real time, to be able to allow them to de-risk and not have anything happen like AMC or GameStop when we had the big run on those stocks and they had to halt trading and people were upset. You think you're trading real time through Robinhood or Webull or these apps. You're not. There's still, settlement and trades that need to take place behind the scenes between the clearinghouses and the brokers. And there's no accounting mechanism that sits across all of them. So Project Ion, which was finalized in 2022, really kind of solved that problem for them. And that was built in correspondence with the DTCC and R3. And I think that's likely who's going to end up being the winner for this one. But what's been tokenized up to this point that's available to the public is only $15 billion. Very small in comparison. And people that have currently done that are Backed Finance and Synthetix. And you also have Sologenic that's talked a lot about it, but really hasn't done much. So those two companies operate on the EVM-based networks, Ethereum, Polygon, and then you also have Optimism. And again, they really haven't gained much of the market on this. It's only 0.013% of total public equities that have been tokenized by either of these parties. And I think, again, that's because in the background, we already know who the winner is going to be. This is just my speculation, by the way. I have no actual evidence of this. It's just, I'm some guy on the internet that's read stuff online. So we'll see what it ends up being. But that infrastructure and regulation is still developing, and we do need guidance here in the US for that. But I do think that that's going to happen in the very, very near future. If we see the reverse carry trade and all of the other things kind of unwind, like I've talked about in my lives and other videos, you would understand why I think this is going to be the winner. So next up, probably one of the other most important pieces of financial infrastructure, if not the most important piece of financial infrastructure, is bonds. Is the backbone for the financial system. These are debts issued by sovereign nations and other parties against underlying collateral like gold or sovereign currencies, treasuries, things that are put up as debt bonds or other bonds. The total market cap globally for bonds is $140.7 trillion. Again, these are huge numbers, okay? The total daily settlement and trades of bonds is going to be the largest of pretty much anything here listed. And that's going to be $1.81 trillion in daily volume for the settlement of bonds. So again, whoever gets this one, probably going to be the behemoth. And I think you're going to be surprised of somebody we just talked about that's going to get this one as well. So what's been tokenized up to this point? Just 15 billion. Very low amount in comparison to the total. And who's doing that? Well, it's the big boys. You got Six Digital Exchange. You've got HSBC with Oron. You've got UBS, and they've tokenized all of this on private networks, which makes sense for bonds, right? So you guessed it, Corda back again, and you got Hyperledger. And then there's some EVM components in there as well. All of these are private networks that are interoperable through the EVM. So who's going to be the winner? Well, probably who already has market traction and the integrations with the large institutions, and where there's been some people that have been tokenizing things. So with HSBC backing it and the other large institutions already integrated with Corda, highly likely that they're going to be the winner here as well, as I sip out of my R3 mug. And then Hyperledger, like I said, you've got some other people that are using private instances of Hyperledger and the Sorbent smart contracts to be able to do this. And this provides enhanced liquidity and efficiency for all of these bonds to be able to trade real time on the back end between all these financial institutions, while not allowing the counterparties to see everything that's going on inside of each institution and how they're using them with their derivatives or whatever else they're doing with the bonds to be able to package them and generate returns. So, but you need an intermediary. And again, I've talked about this in the past on multiple other lives and in the mastermind and on other forums, but highly confident that Corda is going to be utilizing XRP to be able to settle these transactions real time, because it's the only thing here in the US besides Bitcoin that has any type of legal clarity. And if there's enough liquidity in XRP, it would be the token of choice. Now, again, they can settle through XDC if it makes sense. There was legal clarity and liquidity in XDC, but I think XRP is going to be the primary settlement mechanism for Corda for both the back end of the stock market and equities, and for all of these bonds globally. So you can imagine we've got, just between those two, $516.5 billion a day settled for equities. You've got $1.8 trillion settled for bonds daily. So again, people talk about XRP having, 100 billion XRP available. If there's just a fraction of that supply available on the market and you've got to settle these types of volumes daily, that is a huge demand for that token. And again, we'll get back at the end of this video. We'll talk about the price appreciation and potential price targets if we see the adoption in these applications for these asset classes on these networks. So next up, something that's a little less known, but it is becoming more prevalent, and the ESG narrative by BlackRock and many of these other institutions is kind of driving this, and that's carbon credits. So what is the total addressable market for this? Pretty small. It's only $2 billion globally. So what's the trading volume on that? Well, it's, again, kind of small in comparison to everything else here, but I think this is going to be exacerbated when this all moves on chain, similar to a lot of these other things that may have frictions or an unclear market at this time, because there's really no way to account for everything that's out there in an organized way. So currently the trading volume for these credits is $100 to $200 million per day. Not a whole lot, but it is a good application for blockchain and smart contracts. So what's been tokenized on chain? This is actually one of the larger percentages of things that have been tokenized on chain, carbon credits. And that is $100 million worth of these credits have been tokenized on chain, which is really about 5% of the total addressable market globally. So this is, out of all the things here, probably the most tokenized asset class of anything to date. And there's a bunch of people going after this. So you've got Toucan Protocol, you've got Kalima DAO, you've got Exchange, and you've got Guardian on Hedera. So where is this tokenized? Which networks, right? Like I rattled off some people, but We don't know where they're tokenizing these things. So you've got, which has a piece of it, EVM-based networks, so Ethereum and Polygon. You've got HBAR, which again, Guardian is on that one. And you got Xang, which is XRP and the XRPL. So with this, you'll be able to offset, taxes. If you're purchasing carbon credits, the transparency is going to boost the ESG narrative. You can like or not like that. I don't really care, but I do think it is going to be a part of our financial system moving forward. And so I do think that, again, this has already got a lot of traction because it does solve the problems and frictions with this. And that's why we've seen almost 5% of the total addressable market globally already being tokenized on chain for carbon credits. So the next one's probably something that you haven't even thought about. I mean, I kind of had, but like this really came to light for me with NFTs. So if you wanted to generate royalties on your music or on your art or on a patent, and you could put that in a smart contract, that's a really cool application. So that's why I think intellectual property is going to be pretty significant for the tokenization of that. And so we're going to talk about which networks that's going to end up on. The total addressable market for IP today is around $500 billion. It's respectable. It's not crazy like some of these other financial markets, but it's respectable. The total daily trading volume for that is actually fairly low in comparison to the majority of other things. And that's only somewhere between $50 and $100 million daily that's traded in IP rights or royalty payments or some of the other things that go on. So what's been, if you guessed it, in a really small amount, again, in comparison to the total market cap, and that is just $500 million. 0.1% of the total market cap has been tokenized at this point. But we do have a lot of people going after this. And so really some innovative solutions as well. You got BitSong, which is doing this on Cosmos. And they, again, you'd be able to tokenize your IP rights for your music there, and then they would pay you a royalty as people streamed that music or did other things and used that in some application. Right now, like YouTube will shut you down if there's no way to monetize it if you put a song in there and you want to use that song in your video, but there's no way to monetize it. So imagine if, they had access to the full IP records of everybody that owned the music, and they just told you, like, if you're going to use this music, you're going to have to pay to have it in your video. A lot of people, I think, would do that if it was pennies or whatever it is, and it was just streamed to the other person for every time that watched. They got paid a little bit. Everybody wins. I think that's how that'll work in the future with micropayments. You also have IPWE, which is a pretty cool application. They're using a private instance of Casper and Hyperledger to develop IP right tokenization and to be able to, make those royalty payments. I like the privatized version of this. I think that that's where it's going to start. And then you may have secondary markets where people trade those rights, which would make sense for both Casper and Hyperledger because of the smart contracts that are inherent to both and their public and private integrations. And then the other spot that I think, and this is a big player that I don't think has got enough attention for this application yet, that's Algorand. Because of the smart contracts and the NFTs that you can issue on that network, I think that they actually may end up being the winner for this space, but it's still kind of up in the air. I don't know, because of the large amount of IP that exists and the little bit of traction that's been garnered here and non-regulation around NFTs and royalty payments and all the other things that would be improved by the application of this technology. There really isn't a clear winner at this point. But again, if I had to pick one out of the people that I have seen in the space, I think it may end up being Algorand. So probably not something you've thought about, but I thought that was pretty interesting. And it actually is an appreciable amount of value that's going to move on chain from IP rights. So next up is kind of the elephant in the room. This one is what most people are paying attention to right now, especially with the stablecoin bill that's currently sitting on the docket here in the US to be passed. And then Tether being delisted. So most people are focused on stablecoins. And stablecoins currently have around 225, depends on the day, $billion that have been tokenized in stablecoins. I think that number will increase substantially here, even in 2025. As soon as we see stablecoin regulation passed here in the US, you're going to have fintechs and institutions and social media platforms, payment processors. There's going to be a ton of people that bring their stablecoin to the space and want to use it, right? Bank of America's come out. Their CEO said that they're going to bring a stablecoin to the market as soon as there's legislation around it. So I think you're in for an explosion here. So what I'm going to do is pair stablecoins against total global M2 money supply, because I think all currencies at some point in the future will end up on chain. Are you going to have cash? Yeah, there'll still be cash. I don't think that's going to go anywhere. But I do think, the majority of payments at this point are digital anyway, right? The majority of cash that exists, I think we have $1.7 trillion that's currently in cash, and the rest of it's all digits between institutions. And I think that'll get backed, and there's going to be a lot of changes with the monetary system, but separate of that, I think that stablecoins are going to become a huge portion of that M2 money supply. So currently, total global M2 money supply is $90 trillion. And the total global FX market, so trading currencies, the daily volume on that is wild. It's $7.5 trillion daily. So whoever gets this one, again, he's gonna do really well if you garner all of that. So who's going to get the majority of the stable coins and who's going to get the settlement of the FX market? There's kind of two pieces here. The majority of the stable coins up to this point have been minted on Ethereum, Solana, Tron, Stellar, Avalanche, and HBAR. HBAR has its own little studio where you can launch your stable coin. We've got, ROUSD, which is a leader here in the US. That's currently minted on Ethereum because the EVM side chain for the XRPL is not live yet, but it will be here at the end of April in 2025. And I think that you might see some significant adoption of that side chain for this application when that happens. And the other sleeping giant here that I think people are really considering or even think about is Corda. And again, I'll just sip my R3 mug and tell you that there's probably some stable coins that are being issued and worked on for Corda for large institutions. So who's going to be the winner here? Who's going to get the majority of the stable coins? Who's going to settle the back end of the FX market? I think it's probably going to be XRP. And again, take it with a grain of salt. I'm just some guy on the internet that has an opinion. I'm not the end all be all. You might think it's Solana. You might think it's Avalanche. You might think it's Hyperledger, which, again, all of those have stable coins minted on them at this point. You need smart contract capability for stablecoins, period. Like, people are going to want to put constraints on how they can be spent, being able to call them back if they're sent to the wrong place, what they can be spent on, how much of them, how it's taxed. There's a bunch of things here that people have concerns about when it comes to CBDCs, central bank digital currencies. If you're going to be issuing those and paying UBI and or public benefits with them, then you're going to want constraints around stuff, which I completely understand. And if it's going to be my tax dollars going toward that, I'm a proponent of it. There's nothing wrong with that. So anyway, this is a huge opportunity for whichever network garners the majority of these transactions and settles those transactions between the stable coins and the CBDCs and the other fiat transactions globally. And stablecoins bridge global liquidity between digital finance and the traditional financial players. You can swap your cash into USDC or USDT or DAI or Paxos. There's lots of stable coins that exist today, ROUSD, as I mentioned before, and then be able to transact immediately real time with somebody else that also wants the same thing on the other side of that transaction. The difference there, and for FX, if you're swapping between currencies or trading currencies, that's where you need an intermediary that has a DEX built in and enough liquidity to settle those transactions. And again, why I think XRP and Corda are going to be the primary winners here for this application as well. And then you got SBI, which owns 10% of Ripple and R3, and they manage, I think, close to 10% of the FX market there in Southeast Asia and Japan. So, again, partnerships matter, traction matters, all these things matter. Next up, we have something that's a little bit more glamorous that actually was one of the first things that I wanted to build. I thought would be a cool application and probably not a whole lot of people were going after, and that was high-end or luxury vehicles being tokenized on chain, the titles for those. And that's actually a pretty appreciable amount of value. It's $620 billion globally for high-end vehicles. So this is like Koenigsegg, Bugatti, Aston Martin, Ferrari, Lamborghini. There's all these high-end vehicle brands and cars. And I came to find out that they actually have a really good repository of data on all the vehicles that they issue because there's a limited amount and you have to go to their dealer or an approved mechanic to get any work done. So they have full systems already on their back end. They could be integrated on blockchain pretty easily if they wanted to do this. And that's why I think you're going to see the adoption of luxury cars and high-end vehicles first before you see the adoption of, the rest of the marketplace for. And currently the most value that's being traded is in high-end luxury cars, Rolls-Royce, and some of the others that I mentioned. It's about $1 to $2 billion a day transacted in vehicles. And these are through brokers and marketplaces. Most people that own a luxury car only keep it for 2 to 4 years on average, and then they swap it for something else. And you might say, oh, what a rich person problem, but it's just a fairly liquid market that already has constraints around it that would be conducive and make it a little bit easier to move on chain. Doesn't have the same frictions as real estate. And that's why I thought it would be a good application. So what's been tokenized up to this point? Not that much. Again, just 0.08% of that total, around $500 million worth of vehicles has been tokenized. If Jay Leno watches this and reaches out, I would love to have a conversation about tokenizing his collection on chain. I think that that would be pretty cool. But the people that are currently to market with this, you've got Curvio Invest, and they've built this on the Scale network. You've got CoinEarth, which is interesting, and they built it on a private version of Hyperledger. And then you've Inventi, and they've done this on Ethereum and Polygon. So the only one that I didn't mention here that I think has some traction because of some legislation in California is Tezos. And it'd be interesting to see if they actually garner or corner this market because of the government backing that they've been able to achieve. I haven't seen anybody else really get much traction when it comes to working with regulators for this application. So that's why I've mentioned them here as far as like people that I think might be a winner in the market. It's kind of a toss-up again here. I don't know who it's going to be or if it's just spread across these, but Tezos, any EVM network, and then also Hyperledger, I think all have a pretty good chance of ending up dominating the tokenization of luxury vehicles or high-end vehicles. And then we'll get into a few other things that are kind of like the collectibles, right? So we've got NFTs. You know, a lot of people didn't understand the craze for NFTs, and obviously people have lost a lot of money if they held onto those with the Bored Apes and Pudgy Penguins and all these other digital art pieces that were bought. You know, Beeple sold his Everydays for $69.9 or $69.6 million at the top of the market back in 2021, which was pretty crazy. But you've also got, you know, Michael Jordan cards. You've got, if you watch Pawn Stars, there's all kinds of things that are collectibles that have value. And so the total addressable market globally for collectibles is actually pretty significant. It's $458.2 billion as of 2024. And the total daily trading volume for those collectibles is a lot less. It's only somewhere in between 500 million and $1 billion daily. So most people that hold collectibles hold them for an extended period of time. Watches probably falls in this category also. And to date, you've got $1.2 billion that has been tokenized on chain for collectibles. And this has been done by Courtyard, Segment, and VV are the main marketplaces and people that have kind of garnered traction in this market segment. And they utilize EVM-based blockchains. So Ethereum and Polygon are where this stuff is. And I think over the long term, that's probably where it'll stay. I don't know that you're going to see, you know, collectibles because they don't need to be trading real time or high frequency trading or trading volumes aren't that significant. Now that could increase as these things move on chain and these markets become more liquid. People might be, you know, speculating on fractionalized ownership in some of this stuff. And you might find people that have algorithms and trading bots that get into this space if there was real-time trading. And you might see significantly more trading volume as these things became less liquid or more liquid. But at this time, you know, it's not that much. And so with that, I think if it was on Ethereum or Polygon, that's probably okay. Or layer twos on the EVM. It could move to the EVM sidechain on the XRPL, right? And settle through XRP. So we'll just have to keep watching the space and see how it progresses. But the NFT craze has kind of died off at this point, and I think you're going to start to see the real-world application of NFTs, or I like to call them digital titles. And that kind of brings us to the next piece here, and that's fine art. So this is pretty significant. A lot of wealthy people hold a portion of their wealth in fine art. It tends to be in a lot of the family offices portfolios that we consult with. I frequent the old Parkland location here in Dallas. There's a prominent family that showcases their art there, and they rotate it through, and it's pretty cool to see. And they have a very large art collection. And currently the total global addressable market for fine art is going to be $68 billion. And I think that's a bit low. That's what I was able to find, but I think that doesn't include like statues and other types of art that may not be paintings. I think that's primarily going to be paintings. But the total daily volume for the trading on fine art is somewhere between $250 and $400 million daily. So again, in comparison to the total market cap, not a huge amount or trading volume, but it is appreciable. And we've actually got a pretty significant adoption of this asset class. Around 1.17% of all of the $68 billion worth of fine art has been tokenized. So around $800 million currently tokenized on chain. And that's been done by Masterworks, which is a huge leader in this space. You've got Artori, and then you've also got Monix. And these are all, again, using EVM-based blockchains, either layer twos on top of Ethereum, like Polygon or MATIC, or Ethereum itself to tokenize these. And again, because of the trading volume and how long people hold these things for, they tend to be hedges against inflation. They are risk-off assets. and people have, sentimental value for them for whatever reason. I think that it's okay if it's low latency and maybe there's some fees or cost in transacting with this stuff in comparison to, something again that needs to trade real time very quickly on the back end and there's high volumes. But again, this could migrate to the side chain of the XRPL because it's EVM based. And then you could see, settlement through XRP there. Or maybe some other networks, come into the fold. But again, a lot of traction's already been made here. So almost 1%, a little bit more than 1% globally has already been tokenized. And so with that, I think it's kind of cemented itself as the majority of where the market's going to be over the long term. Now we get into some more of the fun stuff. We got private equity. So a lot of people speculate on this, and there's a lot of constraints here that I don't think most people consider when they're thinking about the tokenization of private equity. This really isn't like public markets. There's a lot of constraints and nuance in transactions between counterparties for private equity. You have things like ROFR, or right of first refusal. When people are exchanging private equity, the company that's issued it may have stipulations in the rights to that stock where they can purchase that at whatever the price is on the secondary market and buy it out from underneath the other person, or they have the right to buy it back first and they have to approve the transaction between the counterparties. You've got co-sellers' rights, and then there's many other provisions that you could put into different rounds that you've raised capital through for private equity. And so with that, you need some nuances in the smart contracts. There's also a lot of provisions around who can participate in private equity, how many people can be on the cap table of syndicated deals, what types of ways you're, pooling capital or raising capital through. You got, Reg CF, you got Reg A, you've got Reg D, you've got Reg S, just here in the US. And that's not counting globally. There's many other ways that things are structured and constraints around the transactions and who can participate and how they have to happen, along with the different rights that you have for the stocks. And so with that, it's going to have to be built on networks that are conducive. Avalanche, to me, seems like the overwhelming winner for who's going to be tokenizing the private equity itself. Polymesh could be another one. They have a private and public way of listing that and interoperability between both. And the way that you do that for Avalanche is you would issue it on a subnet, which would be private trusted parties which could transact. And then you've got, the main net where you could go to secondaries for liquidity. So with all of the constraints and nuance about how these transactions have to take place, pretty confident that it's going to have to be one of those two. And I'm leaning toward Avalanche for the winner in this space. That's $6 trillion today. That's currently the total market cap or global addressable market for private equity. There's around $2 to $3 billion per day that's traded in trading volume for this asset class. And what's currently been tokenized is just a fraction of it. Again, 0.08% is roughly about how much, and that's 4 billion is what's been estimated to be what's been tokenized up to this point on Polygon and Ethereum and Avalanche and Polymesh. But again, I think that over the long term, Avalanche is likely going to be the winner here because of how structured their smart contracts can be. And this kind of leads to the next piece of this, and that's SPVs, or special purpose vehicles. We've got a couple different jurisdictions where Reg D funds are orchestrated in this manner, and you might use SPVs for multiple applications, but it's an LLC or a limited company wherever you are in the world. And you use that as a buffer for a transaction. So you pool capital in there from other investors or use it to silo risk for an investment for yourself. And that could be done for a real estate transaction. It could be done for a private equity transaction or investment. It could be done for an M&A deal. You could syndicate a horse. You can syndicate a plane. There's all types of things that you could syndicate, and it's basically a corporation that shows the equity interest for different counterparties that have made the investment and pooled their capital to purchase something. And I think this is going to be the derivative that unlocks a lot of the value before real estate is actually tokenized at scale. Same thing for private equity. Just again, because of all the nuances for the transactions of the underlying shares, people have already built out this application pretty prevalently there. You've got Hive, Equities in, Forge, Syndicately, and a few others that are in the space that are kind of the leaders for transacting and creating these SPVs. Hive did, I think, $1 billion in transactions last year in a Web 2 model. We've talked to them about the tokenization of that. They said that's on the roadmap, but it's a couple years away. So, what does that asset class look like? Well, globally, between Ireland and Singapore and the US and the other jurisdictions where this is a meaningful way to pool capital and invest it, there's over $1 trillion invested in SPVs. And the global trading volume per day on these things is $3 to $5 billion of either investments or people swapping out on cap tables. And all that's been tokenized up to this point is it's about $2 billion. There really hasn't been that much market traction here because everything's fragmented from the documents that are required and the bank accounts and the money movement, the KYC and the K1s at the end of the deal. There's a lot of pieces that are fragmented for this that need to be consolidated so that an oracle can pass that on chain. And that's something that we're working on with Syndicately. So watch out for that in the future. But I don't know which network is going to be the winner here. I think it might actually end up being Axelar because it allows for interoperability between all of these networks. I think that you're going to see adoption again, like I mentioned before. You've already got, Syndicately, you've got Avalanche, which is doing this. You've got Securitize, which is doing it on Ethereum. You've got Vertalo, which is doing it on Tezos. You got DigiShares on Algorand. You got T0. Zonex is another platform that's looking to do this and create an ecosystem for it. And they are partnered with multiple networks to do that. And again, I think that might be why we end up seeing Axelar being the winner for this application. All right, 3 more. This is a long video, but we got 3 more left. So, and I promise you these last 3 are very important and you're going to want to stick around for them. So we've got money markets. And I know that sounds boring, but it's pretty prevalent. There's $6.5 trillion globally in money markets, and these are one of the highest trading volumes. We've got $2.7 trillion per day traded for money markets, pretty close to that amount. So what's been tokenized? 1.5 billion, 0.02%. And that's been done by Franklin Templeton on Hyperledger. You got Circle, which has done it on the EVM, and you got Arch, which is doing it on Hedera. So not a whole lot of people are doing this, but this is another way that you would be able to hedge and trade very quickly if there was market volatility in whatever asset classes you were in, into something that would be able to hedge against the volatility and then also pay you some type of return on your money while it sat there. And so I think this will become much more prevalently tokenized in here 2025 and 2026. I think you're going to see a lot of market traction for money markets, just like we have for treasuries. And again, the winners for that application are going to be Hedera, again, with Archax kind of being the leader there. You got Franklin Templeton with Hyperledger and XLM, which will probably see some benefit. And that makes a lot of sense for me because it's a peer-to-peer or retail product. And most people have a money market at a bank or money market account where you can set your funds there. And right now, it's pretty liquid. You could have your money in 24 hours if you need it, or 48 hours, depending on the bank. But if you could do it real time, you could spend money in and out of that money market account and that could settle real time. Imagine how fun that would be. You'd be able to sit your money there and earn somewhere between 6 and 8% in some cases, and be able to spend that money right out of the account. So it's a big deal. Money markets and mutual funds are going to be something that I think are going to be big news when they start to get tokenized because of the 24/7 trading and the ability to have liquidity while earning interest. So next up is insurance policies. We've got $8.21 trillion that have been written in insurance policies. And this is one that I didn't really think about, but when I was doing the research, I thought, oh, wow, this is a pretty big deal. And there's really only one blockchain and a couple companies that are really heading up this space. And I think they're probably going to get it just because, again, they have market traction early on. So you got $225 million worth of insurance policies that have currently been tokenized, which is infinitesimal. It's a tiny little bit of the total addressable market of the 8.21 trillion. It's still traction. That's a 0.0027% of this asset class has been tokenized. Total daily volume on this is going to be $3 to $5 billion between the premiums paid and the claims that are paid out to people. So that's kind of the settlement between, money movement for these policies, people funding them, and then people, taking the claim out. Life in general, insurance markets are beginning to become tokenized. And the benefit of this is improved transparency for claims automation and the liquidity. So I don't know if you've ever had a claim for your insurance, but it probably took you at a minimum 30 days to get that money, probably closer to 60 or 90 days to get that money. Sometimes they're faster than that, depending on what they are and how urgent it is. If it's a crisis, and things were covered, they tend to pay out a little bit faster. But in most cases, they're going to fight you on it tooth and nail before they ever pay you. And they're going to push it off to the other party or a reinsurer. Insurance companies want to make money. That's what they're in the business to do. However, I think a lot of this can be automated, and that's through these 2 parties that currently have traction. So that's Infino and Zignuts, and they both use Provenance for this. So apparently Provenance has a lot of features and components, and the way that the smart contracts work within that, which is a derivative of Cosmos, to be able to work well with insurance. And that's why it's seen the traction that it has. And I think over the long run, we're probably going to see that's where the majority of these insurance policies end up. And last but not least, we have derivatives. Notional value for derivatives is north of $1 quadrillion. Some people even estimate up to $2 quadrillion because there's really no way to account for all of the exposure that investment banks have from what they've done with derivatives. The way that I'd explain derivatives to somebody is you're at the Super Bowl in Vegas and you are there with your buddy and you bet your buddy that the two guys in front of you that have a bet on this play, not the total game, but this play, when the guy on the right loses because the team throws an interception, the guy on the left is going to punch him. And that's what you're betting on. And the collateral that you use for that bet is $100 that you borrowed from your other buddy that you're there with. And you take leverage on it 10x when you bet your other friend. That's the level of crazy that banks get with the way that they leverage derivatives. And they have to use U.S. Treasuries as tier one collateral, and they use some other collateral as well. But after 2008 and what happened with them using collateralized debt obligations, they've now used commercial loans and some other stuff. But separate of that, that's how crazy derivatives are. And that's why the notional value of them is so astronomical, because they take leverage out and it's on 3 or 4 other things that have to happen for something to happen and then get paid. So the main player for this, and I think, most people, again, aren't even going to heard of this one. Injective and Synthetix, both of those have synthetic derivatives that have been issued on chain, and they use the EVM or Ethereum and Optimism. But I think the main people that are actually going to gain traction in this space are people that, again, have a lot of nuance to their smart contracts. And that's going to be Corda, which is something that is in beta right now that Ripple has been working on for a long time. And that should settle through XRP. And Avalanche, again, because of the subnets and the intricacies of their smart contracts, I think both of those are likely going to be the long-term winners here. What does the total daily volume on derivatives look like? Well, it's 15 to 20 trillion dollars. This is the big kahuna here. If you get this one, you're the winner. Okay. And that's why, again, I think Avalanche and XRP are likely going to be the ones that settle these transactions, because you need the intricacy in the smart contracts. And the only things that I've seen out there that are capable of that, Corda and Avalanche for this piece. So right now, only about $5 billion has been tokenized, again, on some of these other chains. But over the next 5-6 years here, I think you're going to see significant adoption, because you need the transparency for this asset class. Like right now, there's no way to quantify the exposure that investment banks have, because there's not an accounting mechanism across all this stuff. And it's kind of like a free-for-all. And I think they're going to rein it in here in the next 2 or 3 years after we get Basel III and some other things come into place. So right now, 0.0005%, again, just $5 billion of the potential notional value of $1 quadrillion for total addressable market has been tokenized for this. And you might think that, again, that's going to be further off in the future, but I think it's probably coming sooner than later, because again, with the debt market and where things are globally right now, people need to be able to quantify exposure for the investment banks, and this would allow them to do that. So there you have it. There's a breakdown and a long video of all of the asset classes that I think are going to be tokenized, that have quantifiable values, and some of the networks and tokens that are going to be affected by those. So let's talk about prices, because I promised that here at the end. If you've stuck it out with me, I appreciate you doing that. So let's run it down. What are some of the price predictions or potential prices for some of the tokens that we've discussed here in this video? Well, a lot of this stuff has been EVM based. So you would think, okay, Ethereum's going to be to the moon. I don't think that's going to be the case. Because of the frictions and the latency and the cost associated with Ethereum, I think the EVM, and that's why I continue to mention that over and over in this video, versus Ethereum, is going to be the winner for this. And things that utilize the EVM or the Ethereum virtual machine on top of a network that can settle real time or with low frictions and costs like Polygon or the XRPL and the EVM sidechain there, I think are going to end up being the winners for the majority of those transactions and the volume from those markets that utilize Python and Solidity and those smart contracts to be able to execute in those environments and for those applications. So with that, I think that Polygon could do really, really well. MATIC could continue to do really, really well over the long term. It's been as high as $3 in the past. I think you could see a 10x on that token from the previous all-time high if we see the adoption of just, 10 or 20% of these applications moving across that network which I think is pretty reasonable. Now, the EVM sidechain on the XRPL, I think, is going to aggregate the majority of this. I think there's going to be something that potentially happens with Ethereum over the next 12 months that causes a significant migration from the utilization of that network as the main net to other layer 2s or applications on other things. Again, that just, we've seen a big movement to Solana here in the last year for meme coins, right? Which is a stupid application, but it's because it's cheaper and faster to move them. The gas fees and the latency over there on Ethereum cause that to be not a good solution for it. So again, I think things that are layer 2s or that are interoperable with the EVM are going to garner the majority of that value. And therefore, both Polygon or MATIC and XRP, I think, are going to see the majority of that. You could see a $30 MATIC, and I think XRP, we'll talk about the potential price for that on the other side of some of the other pieces here. So yeah, Algorand, we talked about IP and we talked about commodities for Algorand. With just those two applications, I think that Algorand could easily see, $10 to $20 at some point once we get the actual adoption of that technology in these applications for the settlement and issuance of the NFTs or digital titles, for the IP rights, and then also for the trading of commodities. And we talked about futures a little bit for commodities. That's going to be in the derivatives market. And again, I think Corda and XRP or Avalanche are likely going to be the ones that end up getting the benefit there. But Algorand in particular, like I said, I think a $10 or $20 Algorand is likely for the adoption in these applications. So that's Algorand. Next up, we'll get into XLM or Hyperledger. So another big giant. There's a lot of different applications here where Hyperledger could be used. We talked about it for institutional funds. We talked about it for bonds. We talked about it for stable coins. And we talked about it for money market accounts. So with all those combined, over the long term, I think that XLM could really see almost 4 digits. I know that seems asinine with the current price that it sits at today. But if it does see the adoption in these applications and you need it to be able to process micropayments, that makes a lot of sense for where it sits and the people that developed it and the current supply and a lot of the other tokenomics that are associated with it. So, that's probably a 10-year price prediction, maybe more than that for it to get to $999 or 3 digits, maybe even north of somewhere between $100 and $500, I think is realistic, given the total supply and the market dynamics and tokenomics for XLM. And the Sorband smart contracts and all of the different partnerships and the integrations that they have, super, super bullish on XLM over the long term for these applications. So let's talk about Avalanche. And then we'll get into HBAR, Provenance, and Polymesh, and then finally XRP at the end. We've already seen some huge price appreciation on Avalanche back in the early days of it and the speculation on it. But I do think you could potentially see somewhere between $1,000 and $5,000 Avalanche. I know that seems crazy, but if it gets the adoption for private equity and portions of the derivatives market, that's a lot of liquidity that's going to have to be settled through that. And you need the nuance in their smart contracts to be able to provide liquidity in those applications and settle those transactions with all the contingencies that are attached to them. So I don't know if it's just going to be Codius that ends up with the derivatives. If it is, then Avalanche would be far less. If it just got the private equity application, we're talking to them about some other stuff that could be built on their network because of the subnets and the main net and the way they have things structured and the way that things are validated. But really, really cool blockchain team. Avalabs is doing things for a lot of ticketing and other applications on that side for NFTs. So with that, again, we saw a high of around $130 in the past for Avalanche, currently sitting at $20 today. And I'll just mention this here because I didn't say it before. None of this is financial advice. I'm just some guy on the internet that's speculating. Please do your own research and speak with your financial advisor before making any investment decisions. But Avalanche, again, I think could be somewhere between $1,000 and $5,000 if it got a lot of traction in the derivatives market. And I do think it's going to get a lot of traction in private equity. So worst case scenario, I think a good 10x from its previous all-time high, around $1,000 is very reasonable for that token as well. Now, Tezos, there's a few different applications for that. We've got, the car titles, and there's some other NFTs issued on that chain. It's got some interesting stuff. We've got Vertalo issuing stuff on that network for SPVs. So I don't know what all it's going to be involved in or which applications it's going to win out for. But, with a previous all-time high of around $8, again, I think a 10x from previous all-time high is quite reasonable if it did get the adoption in any of these applications for the volumes that would be moving over that network and necessary to transact and settle those payments. Around the $80 Tezos, I think somewhere between $50 and $80, I think is quite reasonable for the long-term value of that token. When I say long-term, again, we're talking next 5-10 years. All right, now we got HBAR. I'm super bullish on HBAR because of the security of that network and the adoption that it's seeing for stable coins, for carbon credits, and for the money markets. And we've talked to their team. They're here in Dallas with me. So there's other things that they're working on as well. And I think that they are going to get some pretty significant adoption. I think that they could actually be the core and the base layer for the majority of dApps on Web3. So if they get just a fraction of some of these applications, again, I think HBAR could easily be somewhere around $50 or higher over the next 5 or 10 years, potentially even higher than that if we do see, it ends up being the base layer for Web3. And I talked about medical records at the beginning of this. That's another application, data management. And those are things that are hard to quantify. You can look at these financial products and markets, and it may get some adoption here, but the main applications I think will be in stuff that's yet to be seen or quantifiable. And that's why I think the price could be much higher than that. But based on the numbers that I'm seeing here, around a 200x on HBAR is quite reasonable for its adoption in these applications. Plus, if it gets just a portion of the other pieces I'm mentioning. All right, so we got 2 more. We got Provenance, and then we've got XRP. So, Polymesh as well. So 3 more. So Polymesh, there's a couple different applications for that. Polymath is the token. David Schwartz has talked about that for public equities. He has an allocation to it, which tells me, something. If he's a cryptographer and understands the space and he has an allocation, probably some benefit there. We've talked to their team at Consensus a couple years in a row here, and I do think they're going to get traction for tokenization of SPVs or private equity in some capacity. I don't know that it'll be as prevalent as Avalanche in that application, but I do think that they may see secondaries on their network. In the past, Polymath has been as high as $1.20, and most of the time when we've seen that type of chart, that was where it was launched or pretty close to it, and it's fallen pretty significantly since then. It currently sits at around 31 cents. We saw this same chart pattern with HBAR, and we saw it with VeChain. And those ended up going about a 10x from the previous all-time high where it was launched at. So I could see, somewhere around a $10 to $20 Polymesh or Polymath token in the future over the next 5 or 10 years if it does get the adoption of some of these applications that we discussed here on this video. And that's, again, these are just arbitrary price predictions based on the math that I have here and previous tokenomics or previous price action and the tokenomics that exist for the token. Now we got Provenance. Hash is the token that's going to be associated with that network. And again, Cosmos is probably where that'll settle over the long term. It's a derivative or layer 2 of Cosmos. So both of those tokens, right now Provenance is trading or Hash is trading at just 1 penny. If you saw the actual adoption for Provenance and Cosmos to be able to build out all of these insurance products, this is a banger. I'm actually kind of rediscovering this for the first time. I think that there could be some really significant price appreciation on this network if you saw the adoption for this application in particular. And because of the smart contracts that have been developed for this network, again, it's kind of the leader here. So, man, sky's the limit. You could probably see a $50 to $100 Provenance if it was adopted at scale in this application for the volumes that are going to be moving between the premiums and the claims that are going to be paid out by the insurance companies. So again, these 2 corporations, they're not working with like the Lloyd's of London or Geico or some of the larger carriers or the insurers. But I think we may see another leader kind of emerge in the next 2 to 3 years in this space. Again, the current amount that's been tokenized on chain is very small in comparison to the total value of the space. And so with that, you could have somebody come out of left field. But at this time, if you saw Provenance or Cosmos get the majority of this market, they could easily 100x or 200x the value of their tokens. And then last but not least, and I saved it this way for a reason, because I'm going to talk about numbers that people are going to have a hard time grappling with. There's just a lot of different pieces here in what's been discussed today where XRP could be the main modality or settlement mechanism. Corda, again, winning out for bonds and for equities. And then you got stable coins, just anything that's EVM based could end up moving over to the XRPL, including money markets. It could be, collectibles. It could be cars. It could be art. It could be private credit, US Treasuries, commodities, institutional funds, real estate, carbon credits. Almost all of these have some EVM application that could move to the side chain on the XRPL and be settled through XRP or Corda. And Ripple's stated value proposition for XRP early on when they were looking to get market traction is literally all the money. And I don't know that they'll get all the money, because we have seen such a, long time to market and the adoption of this technology. But I think they're probably going to be 80% settlement globally on the back end of all of these financial products will move or touch XRP at some point because of the DEX and the institutional adoption and integrations that both Ripple and Corda have globally with enterprises and everybody else. So if that's the case, and you've got, 80% of global trading volumes moving through that network and the token, 10,000 XRP doesn't seem so crazy. Maybe even 100,000 XRP doesn't seem so crazy. If they got the derivatives market and then the volumes of these markets were to be able to be settled real time and the volumes increased. But that's the other piece of this technology that most people don't realize. The analogy I make is to mail and email. Imagine how many letters used to be sent through the post office. Probably a lot more than there are today, but it still wasn't maybe 15 or 20 letters a week that you were sending to counterparties. And now you should send hundreds of emails per day. So the volume of transactions that settle across an economy are going to pick up substantially when this technology is introduced. And so with that, the global daily trading volume of a lot of these markets are going to increase as well with the settlement volume because the frictions won't be there. Counterparties won't be raking fees, or intermediaries won't be raking fees in the middle of all of this, and everything will be real time. And so, 24/7, 365, the stock market's supposed to move to 24/5. So it'll trade, 24 hours a day for 5 days a week. Just the volume of transactions over the other time that it's currently not trading alone would be even more, right? So with all of that moving and touching XRP at some point in the value transaction for all of these different markets, highly likely, in my opinion, once we see the adoption of this technology and these applications, that XRP would easily be 5 or 6 digits in value to be able to provide liquidity, to be able to settle all these transactions globally. So there you have it. This has been a long video. Thank you for hanging out with me the whole time. Hopefully you got a lot of value from this. Again, if you want the full breakdown and resource of this, you can check out the mastermind, beyondbrokemastermind.com, and get in there for a free month. The code is beyondbroke, all capitalized, the number 1, and then MO like month or Mary Oscar. I'll get you a free month there in Carbon 1, and this will get you access to this resource, us, the community, private deals, and many other things. And again, if you want financial services, reach out to digitalwealthpartners.net and the contact us page there to be able to borrow against your digital assets or generate returns on your XRP. So with that, we'll go ahead and wrap it up. I hope you have a wonderful week. Thanks again for liking and subscribing to the channel, and we'll see you guys on the next one.